Hello everyone, welcome to another video. In this video, I'm going to guide you on the basics of technical analysis. And if you are new to Forex, please head to my channel and watch the beginner's video first. Without further ado, let's get started on today's topic. Let's get started on technical analysis. What is technical analysis in Forex? Technical analysis is the framework in which traders study price movement. The theory is that a person can look at historical price movements and determine the current trading conditions and potential price movement. Someone who uses technical analysis is called a technical analyst. Traders who use technical analysis are known as technical traders, just like myself. There are two types of technical analysis while trading Forex. The first type is naked chart analysis, which is what I use, and the second type, which is using indicators. In today's video, I'll be going through naked chart analysis. I'll be introducing indicators in another video. There's plenty of indicators in Forex. I will be having one video for each indicator, so remember to subscribe to my channel so you wouldn't miss out on that. You may be wondering where to do technical analysis. Don't worry, let me share you a few platforms that you can use, of course it's for free, to analyze your charts. The first platform is Tradingview. Tradingview is a web-based social network for traders, allowing them to interact and share trading ideas, as well as analyze and trade directly from Tradingview's advanced charting capabilities. The second platform is Metatrader 4 and 5, or we can call it MT4 or MT5. Metatrader 4 and 5 is a platform for trading Forex, analyzing financial markets, and using expert advisors. Mobile trading, trading signals, and the market are the integral parts of Metatrader 4 and 5 that enhance your Forex trading experience. Of course, there are also many other platforms, but this is the two platforms that I personally use myself. For today's teaching, I'll be going through everything on Tradingview first. So as you can see here, this is a Euro USD chart over here. It is on a daily time frame. So you can see there are a lot of diagrams over here. These are what we call candlesticks. It is actually the foundation of technical analysis. So this is a Euro USD, which is a Forex pair. But if we jump to look at the S&P 500, which is the US stocks index, as you can see here, this was my previous analysis. Just ignore it, let me delete it. And as you can see, we are also using candlesticks. There are of course many other choices in the market to use, but what I prefer myself is candlesticks. Just this, even if you trade the Bitcoin, which is the cryptocurrency, as you can see here, this is my previous analysis. As you can see here, we can also use candlesticks to analyze the market. I am going to explain candlesticks now. So what is candlesticks? A candlestick chart is a style of financial chart used to describe price movements of a security, derivative, or a currency. Now we are going to look at the anatomy of candlesticks. As you can see over here, green candlestick is labeled as bullish candlestick. The color can be set according to your own preferences. If you want a red as your bullish, you are able to do so. Simple words from what we can see here, green is the bullish, while red is the bearish. Bullish means up move, it means that price is increasing, whereas bearish means down move, which means price is decreasing. For the bullish candlestick, we have the open at a lower point and the close at a higher point. Just for example, the store started selling apples at $5 and sold the apple at $6. So what is the high and low? High and low is where price has visited during that specific time frame of yours. Remember this, if your time frame is 1 minute, it means 1 minute per candlestick. So if I were to explain in this diagram, if I were to explain from this diagram, from the start of the minute, price opened at this point of the candlesticks, then it traveled to the high and low during that minute. When the minute ends, the price got closed at this point of the candlestick. For the bearish candlestick, we have the open at a higher point than the close at a lower point. Just for example, the store started selling Apple at $5 and sold the Apple at $4. If I were to explain in this diagram from a 1 minute perspective, from the start of the minute, the price opened at this point of the candlestick, then it traveled to the high and the low during that minute. When the minute ends, the price got closed at this point of the candlestick. So now after you have understood what is a candlestick, let's dive in deeper to look at the charts now. As you can see here, this is TradingView. This is Euro USD on a daily time frame. So what does that mean? Over here, it means that every single candlesticks represent a 24 hours of price movement. On this Euro USD chart, you can see this candlestick, it represents the 19th of June. It opened at a higher point and closed at a lower point. So it means that on the 19th of June, Euro USD moved from a higher price to a lower price, which means a bearish move for the 19th of June. Whereas for the 15th of June, which is this candlestick, it opened at a lower point and closed at a higher point, which means that the whole day of 15th of June, the price went from lower to higher, which shows a bullish move for 15th of June. After you have understood what is the candlesticks and how to read the charts, now let's look at uptrend and downtrend. Uptrend and downtrend is actually very simple to understand. Uptrend means that in this whole move, price was going higher, and for downtrend, it means that in this whole move, price is getting lower. Let's start with uptrend first. So how do you actually identify if it's an uptrend or a downtrend? Firstly, if you look at this move over here, if price had a higher high and a higher low, and it continues to make another higher high and a higher low, we are safe to say that price or this particular asset or product or currency is moving in uptrend. Don't worry, we will jump to some live examples to look at uptrends. This is a Euro USD daily chart. So how do you identify if it's an uptrend or a downtrend? Firstly, let's say if we start from here. So this is the point that we start. Firstly, you have to draw. You have to draw a high point and a low point first. If price decides to break out of the high point over here, as you can see, this is the point where it broke out of the previous high. So we can proceed to draw a circle. So this is what we label as higher high. We have a higher high here. Next up, price came down lower again, but it did not break past the previous low. So this is what we can label as a higher low. Higher low. Next up, price continues to push up higher. This point broke the previous high, which is this higher high, so we can safe to say that this is another higher high. So I'm going to use a short form, which is HH, which is higher high. Price then came down again. But it did not break the previous low, so we can say that this is another higher low. So I will use the short form HL. So again, price continues to push up again. It broke the previous high, so we can say this is another higher high. And price decides to push down again, but it did not break the previous low, the previous higher low. So this is another higher low formed over here. So as you can see over here, we have higher high, higher low, higher high, higher low, higher high, and higher low. This is the key things to determine that this is an uptrend. Now let's look at the next type of trend, which is downtrend. So what is downtrend? Downtrend simply means it is just moving down in this whole movement and creating or making lower prices. So how do we actually identify if it's a downtrend? Very simple. So you can see price made a lower low, so we can identify as a lower low. Then price proceeds to push up again, and it did not break the previous lower high. So we can see this is a new lower high. And then we can also draw a circle over here to identify. Then price decides to break the previous low and make another lower low. So another lower low is formed over here. Then price decides to go up again, but it did not break the previous lower high. So this is another new lower high that is formed. So these are the key things to identify if it's a downtrend: lower low, lower high, lower lows, and lower high. So this is a downtrend. Don't worry, we'll also look at some live examples later. As you can see here, this is a USD JPY daily chart. Assume that we start at this point over here, so you can draw a line here from the last high and the last low over here. So you can see that price went up and proceeds to break. It broke down from the previous low. So we are safe to say it made a lower low here. So lower low. We have a lower low here. Then price decides to push up, but it did not break the previous high. So this is another lower high formed. So we can safe to say this is a lower high. Next up, price pushed down even lower and broke the previous lower low. Since this is the new lower low that is formed. So I'm just going to use the short form, which is LL. Lower low here. Now price pushed up again, but it did not break the previous lower high. So this is the new lower high that is formed over here. So I'll use the short form, which is LH. Then price continues to push down again and broke the previous lower low. We can either take this point or even this point. That is totally up to you, as long as the price has broke the previous lower low. So I'll just say that this has broke the previous lower low. I will take this point and it made a new lower low. So right here, the price actually went up a bit, but the candlesticks actually did not close. The candlesticks did not close past the lower high, so I wouldn't consider this as a break of lower high, and it still remained below the previous lower high. So this is another lower high that is formed. So we can see over here we have lower low, lower high, lower low, lower high, lower low, and lower high. We are safe to say that this is a downtrend. That is it for today's course, where I've taught where you can analyze the market and what is candlesticks, and mainly how to identify uptrend and downtrend. In the next course, I'll be going through how to draw or identify support and resistance, which is the key zones to take buys and sell. I'm sure you don't want to miss the next course, as it is very important. So make sure to subscribe, like, and share with your friends so that you wouldn't miss the next video. I'll see everyone the next time. Bye bye.